Hello and Assalamualaikum. In this video, we're gonna present about portfolio management analysis. In our group, we consist 5 members, which is myself, Nizari Sofia binti Halimi as a leader, Nur Shazwina Azrin binti Nur Herman, Nur Hazila binti Muhammad Afni, Muhammad Zikri Daniel bin Zainal Rashid, and Muhammad Muammar bin Sadali.
Hi, Assalamualaikum and Salam Sejahtera. My name is Muhammad Zikri Daniel bin Zainal Rashid and I am from JBA 1145H. So, in this video, I will explain about the introduction of portfolio management, just the short one, which is the chapter 1 of portfolio management subject. Okay, so portfolio management is the aim of managing different security within portfolio which address investor need to achieve investment objective in order to obtain a suitable return percentage in line with the risk portfolio management in the portfolio defined as the management of investment pool. Furthermore, there is some risk that for particular share we have to settle on the portfolio. The collection of the portfolio share therefore diversity and maximize return on investment.
Hello, I'm Hazila and I'm going to talk about the security analysis that we choose. And for the first stock that we choose is Maxis Berhad. Maxis Berhad was first founded in 1993 and the headquarters is currently located in Kuala Lumpur, Malaysia. Maxis Berhad operates as a mobile and communication service operation in Malaysia. For the calculation part, average return for Maxis Berhad from 2014 to 2019 is 1.1945%, and for the variance it is 43.3929%, and for the standard deviation is 6.5873%, and for the coefficient of variation is 5.5148%.
Next, the second stock is Sparzer Berhad. Everyone knows Sparzer as a Malaysian best-selling natural mineral water. Since the late 1980s, Sparzer Group of companies, which consists of 8 subsidiaries, have been specialized in manufacturing and distribution of mineral water, sparkling natural mineral water, distilled drinking water, carbonate flavored drink, non-carbonate flavored drink, functional drink, toothbrush, preform, and packaging bottles. The director of Sparzer Berhad stated that, in their opinion, the accompanying financial statements are drawn up in accordance with Malaysian financial reporting standards, international financial reporting standards, and the requirement of the Companies Act 2016 in Malaysia, so as to give a true and fair view of the financial position of the group and of the company as of December 31, 2018, and of the financial performance and the cash flow of the group and of the company for the year ended on that date.
Hi, Assalamualaikum. So my name is Muhammad bin Sadali. I'm from JBA 1145H. So for today, I would like to present about security analysis. The part where I've chosen a stock from FGV Holdings Berhad Company. They're a Malaysian-based global agriculture and agro-commodities company with operation worldwide. So the FGV produce oil palm, rubber plantation products, soybean, canola products, oil chemicals, and sugar products. So the headquarters is at Kuala Lumpur, Malaysia, and the key people of FGV company is Harith Fazil Hassan as the CEO. So for the part of calculation, for the return, I have made about 6 years for the time period. So started at 2014, the return is 0 and 24.5991, and negative 7.0425, negative 1.8751, 129, and 7575, and negative 52.9593. And for the ending value, started from 2014, which is 2.0279, 1.6004, 1.4891, 1.6606, 0.7010, 1.4902, and for the average return that I have calculated is 18.4799. Also, there is variance 3,717.6914 for the standard deviation is 60.9729 and coefficient of variation 3.2994.
Next is stock number 4, which is Hartalega Holding Berhad. For Hartalega, it is the world's biggest manufacturer of nitrile glove, making 14 billion gloves annually. It exports to Americas, Europe, Middle East, as well as Asia Pacific. It is the first company to introduce a soft, stretchy nitrile glove, emulating the natural properties of natural latex rubber. And the company's vision is to become the top 1 glove company that manufactures and offers the world's finest and most creative glove, and to be known to the community and the environment as a caring company.
Next is the part of KLCI index. So the KLCI or FAM KLCI, also known as FTS in Bursa Malaysia, which is Capitalization Weighted Stock Market Index, and it's made out of 30 largest market capitalization companies in Bursa Malaysia. So for the average return that I have calculated is negative 2.2926, for the variance 26.2893, standard deviation 5.1273, and coefficient of variation is negative 2.2364. And the last part is for the comparators analysis. So we have chosen 3 stock of the 3 company for the portfolio. So the return on portfolio for the 3 stock chosen is 7.9709%, and return on risk is 17.8361. For the KLCI return on portfolio, negative 2.2926, and return on risk for KLCI is 5.1273%. So based on the calculation above, I can conclude that the return on portfolio for the stock is higher than KLCI index, and the return on risk also higher, so it shows that our portfolio is outperforming the market. So that's all. Thank you.
Next, I'm going to explain Chapter 3, which is Portfolio Analysis. The security analysis has been performed for stock 1, 2, 3, and 4. The analysis shows that CV for stock 1, 2, and 4 is lower risk to compare with stock 3 and 5. Therefore, the portfolio manager decides to choose stock 1, 2, and 4 to be included in portfolio. First, we calculate covariance first. The purpose of covariance is to measure the movement of security. So after we conclude for all 3 stocks, we got 916.9574. Next, we calculate for correlation. The purpose of correlation is to measure the relationship between 3 stocks. So after we calculate the all 3, we got 0.2088. Next, portfolio return and risk for selected stock. The portfolio manager has picked 3 securities to be included in the fund with a weightage of 40%, 35%, and 25% for stock 1, 2, and 4. The portfolio return if stock 1, 2, and 4 are included in the portfolio by the portfolio manager is as follows. For the return on portfolio, we got 7.9709%. Meanwhile, for risk on portfolio, we got 17.8361.
In a nutshell, we managed to acquire a thorough understanding of portfolio management analysis activities, which include security analysis, portfolio analysis, as well as comparative analysis. This tells us on how it is possible to analyze security movement and measure stock relations. We even have an understanding on when to invest in portfolio management, which offer higher returns than those with a small risk. For our portfolio analysis, we use KLCI as our benchmarks, and we also have used 40% of 2 million ringgit Malaysia to invest for stock 1, while 35% for stock 2, and the balance goes to stock 4. The number of companies selected from different industry, and to conclude that we choose stock 4 since the company has the lowest CV and higher returns among these 3 companies. Therefore, the return on risk for stock also higher than KLCI index, which 17.8,361% and 5.1,273%. And it shows that our portfolio is outperformed in the market. Well, for the recommendation, from our point of view, we can say that we shall proceed from security analysis to comparative analysis, which our decision reveals that our portfolio outperformed the KLCI market by 17.8,361% in the return of the portfolio. With the portfolio return we obtain, however, we ensure that these stocks are much stronger even though the risk of the portfolio is greater and greater. Thank you.